Welcome everybody. Let's take a look at the market. So these are the S&P 500 futures. We're going to look at the weekly. We'll look at the daily. We will look also at the intraday charts and see where the trades of the day are. Let's get started here on the weekly chart. Well, look where we're at here. Today is Wednesday. So this is the week right here. And you know, isn't it just, this is amazing. This is amazing. Look at this. Is this just a coincidence that it came down today? The low was, 50.47, got a little below this, but basically it retraced. And where did it close? 50.61 and a half. What is this number right here? 50.63. Now, why would in the world would it do that? I've had this support on there for weeks. From way back here. You can see where I started it way back there. Why is that? How did I know the market was going to pull back to this spot? Why did so far this week has it just come right down and just sat right out? Look what it did last week. It did the same thing. It came right down and touched the 51.69 here. I don't understand why it's doing that. Okay. For those who watch my show every day, Monday through Thursday, well, you know I talk about natural support and resistance points, and well, there they are. You can Fibonacci till you're all blue in the face, folks, and that's fine. Do your little Fibbies, your 23s, your 38s, your whatevers, 50s, and I think there's a 78. You can go this way with it. You can go that way with it. That's all fine and dandy. Stretch out your Fibonacci's, okay? You go do your thing. But if this doesn't prove my point about natural support and resistance points in the market, I don't know what will. I mean, the market comes and exactly rests on these spots that I already had marked. All right. So, you know, as I said before, sure, use your Fibonacci retracement tools, extension retracement. That's fine. But that's not what the market's going to do. The market is going to always return to places where it once had a sticky point. So on the weekly chart, where's that next? My gosh, there's this huge number just sitting right there. And that's where we're headed, folks, 49.37. Now on the daily chart, there's some stuff in between here. But this is where we're headed. And I believe the market will come down to this before this is all said and done. Do I think this is going to be straight down right away? That I can't say. I don't know if it's just all going to happen like, you know, the rest of this week and next week, all of a sudden we're just going to come all the way down here. I don't know. All right. I'll talk about my kind of what I think could happen here in the short term on the daily chart when we get to it. But there's your number, guys and gals. It's going to get 49.37. It will happen. Okay, this number is going to happen. This is too shallow of a number. There's too much time left for the end of May, kind of the June area here, okay, for this not to happen. Now, it doesn't mean the market won't bounce in between here, okay, but I believe this 49.37 is going to happen. We got the waterfall happening big time in the SMI. We got the MACD crossing over. I mean, my goodness. Even if this MACD doesn't reach zero, I mean, it's probably still going to come down somewhere, down to 100. Look what it did last time. It was much lower, but it came all the way down almost to zero. I mean, you know, just draw the line. You know, something like this. That's why I said the last few days, this market, you know, the pullback could extend. It could come out over here. It may not do that. It may come down here, bounce, and then it may like die a death, you know, sooner than people think, or sometime into 2025. Because I just don't think this right here is going to play out for a while. This rollover is going to play out for a while. It may do a little, then pause, and then down more, and whatever it's going to do, I don't know. But I think this momentum crossing over, I mean, look at this one. Crossed over in August. It lasts all the way to the end of October. Okay. So 1, 2, almost 3 months. We're way up here. So this thing could do the wiggy wiggy, bouncy bouncy, whatever. Who knows? Bounces again. And momentum just continually slowly loses its momentum over a long period of time. Again, that could bounce for a while, then end up coming way out into 2025. I don't know, but I think America is in for a rough ride even after we get this bounce. And it may even go to all-time highs coming out of here and going up and, coming down like this, go up to all-time highs, whatever. Maybe it's over here like this, goes up like that. But after that, after we get over into 2020, late 2025 or whatever is going on this way, I think we're in for a big surprise here. I don't know exactly how this is all going to play out, but this looks very ominous. And I think America is in some serious poo-poo for quite a while. I said it before. I think over the next 10 years, America's in for a very rough ride. Of course, whoever the president is, the next president could make a difference. But I just think, when you look at the national debt that's at $35 trillion, and no president, not even President Trump, addressed the national debt when he was president. And if you don't address that monster, it's over. I'm telling you, it's over. All right, let's switch over to the daily chart. This is the daily chart of the S&P 500 futures. Let's take a look and see what we got going on here. Today was a pretty monster day again, 73.5, pretty decent day after yesterday's indecision day, which was, bounced on that, pulled back a little bit, but it was a small day and just kind of sat in the 50-85 area. And today, sure enough, it came down. I mean, there it was. There was the support yesterday. And today, sure enough, came down, touched support today. All right, I got that like crazy voice going on. Yeah. So anyways, what do I think we're going to get next? It's really hard to know exactly because the market is pretty depleted here. I mean, we're down at negative 76 on the SMI. So it's kind of hard to know what's going to happen in the really short term. There's a possibility the market stalls and bounces a little bit somewhere in here. And maybe it does it in the very end of April. There's not a whole lot of wiggle room here, though, because there's another cycle low here. I mean, it could kind of bounce somewhere like right here very late in April. It could be a small bounce in here somewhere. Maybe. Or the price just stalls. I'm not sure what's going to happen here. It's a little bit up in the air. Okay. And then down into May, another bouncy bounce into May 8th area. I think there'll be a pullback into that area. Then a bounce maybe, whatever. I don't know wherever we're going to be. Doesn't matter. And then a final to pull back pretty hard down into this late May, kind of middle of June area. That's kind of the sense I have. On the other hand, the other scenario is that given how the weekly chart looks like it just wants to give it up, this thing could just get some steam going, and we could hit 50-12 like sometime this week even. Right, we're only, let's say 50 points away from that right now. Not quite 50 points. So we could come down and hit this 50-12. This is also another natural kind of support area. Come off these, really just these three candlesticks right here. 3 out of these 5. The top, see, so I talked about is you got to have a feel for where sticky points are in the market. So why do I say there's something approximate 50-12? Because look, you've got a candlestick here and a candlestick here. Their bottoms are touching each other. The tops of these two candlesticks are on the same line and the bottom of this one. So you guys got to look at clusters of candlesticks. Okay, so there's 5 candlesticks here. A combination of both their bottoms and tops make this support line. Okay, you see it right here. There's even this one over here. The top of this one is what? 50-17, see? So I'm just kind of taking an average right in this area of these 6 candlesticks. All, either their tops or bottoms cluster around this number. Those are the things you want to be looking for, okay? They're just far more reliable than Fibonacci, especially when you're, okay, how do I explain this part? Especially when the market's already been there. So when you're going to all-time new highs, the market hasn't been there yet, right? So you don't really know what's going on. Okay, but when the market's already been there, in this case, we're pulling back into price or point values, okay, because this is futures. We do points, not dollars and cents. But comes into point values here. The market's already been there. So the market's going to gravitate towards those sticky points like it did today and like it did yesterday. All right. If we get a bounce in the market, I mean, look at these candlesticks up here. 1, 2, that one kind of 3, 4, 5, about 6 candlesticks, all of them make up this 5081 area. So you know if the market gets kind of strong for a week or two, it's going to come up into here. It's going to find a whole lot of resistance right at this area, right? It's going to resist in this area. It's going to be kind of a resistance point. All right. And then if it really got super strong, your resistance would be at 52.67 for sure, because a lot of the top of the candlesticks are there. This one, this one, this one, this one, this one. Look at all these candlesticks. All of them right here. Just super massive amount of resistance. All right. All right, so going down, since the market's going down right now, and probably will continue to go down, like I said, then the next one is 5012 really here in the short term. But that's that one, and then below that one is 4970. Let me just take a look at these other ones real quick here. Kind of stretch this out a bit. I'm just kind of getting a feel for what I'm looking at. There's some big gaps here. There's some really big gaps here. I mean, the 4970, the 4036, they kind of, this 4970 is fairly solid support. It's fairly solid. 1, 2, 3, 4, 5 of them all kind of in that area, maybe even a little bit of that one. So that's a pretty strong support there at 4970. I can see the market stalling right there for a little bit. 4936 is a little weak, but it is there. It's these 1, 2, 3, all these wicks, these lower wicks make up this 4936. And then lastly, big drop all the way down to 4872. Okay. I could see the market, when this is all said and done, somewhere in this area. Well, for sure 4970 all the way down to 4808, like this area, is kind of the target area. It's hard to know for sure right now what's going on, where we're going to settle in here, but these are the numbers you want to be aware of. Okay, now this number, like I said, the SMI is pretty depleted. So as the numbers get this negative, the MACD is starting to cross over the zero line down here. Gotta be a little bit more cautious. You can't, I mean, runners main, you just need to be more careful. So smaller positions, maybe. You certainly want to have your risk management in place. Maybe I'll put out a video on, risk management and some of the ways that I go about dealing with risk. We'll put that maybe in another video, okay? When the market starts getting to places where you might see the market stall or you might see a bounce, but you're not really sure, you really don't want to put all your ammo, so to speak, or use up all your margin. Right? You don't want to be anywhere near using all your margin. Now, I know really small retail accounts, they struggle with this because, they only have small amount of money in the first place, so it's hard not to use it all. But you always want to try to leave some in the tank. So let's just say that your account can handle 2 E-micros or 2 E-minis, like, whatever. Doesn't really matter. Whatever your account size is going to dictate the size of your positions and the product you trade. Okay. So let's say you normally trade, let's say since the market's been so aggressively pulling back and you're using up a decent amount of margin and you're trading, let's just keep this simple. You're trading 2 E-micros or 2 E-minis, okay, on the futures. And you can, guys and gals who trade options, you can extrapolate that out on how much you use for your options contracts. But you might want to reduce it to 1. You might want to reduce those positions to 1 instead of 2. And the reason I say that is because you're trying to get the timing and direction correct, yeah? And so you're going along and you believe the market's going to continue to pull back, but let's say it surprises you. right? You've done all the analysis, you've done everything you think you can do to properly forecast what the market's going to do, right? You're watching Giddis's videos, you're a member of Giddis, and you're just, wow, Giddis says this, Giddis says that. But let's say you get it wrong. Let's say your timing's off, or your, whatever. Well, having the other contract or the other half of your margin that you normally use up in reserve, the reason why you want to keep it there in times like this, when the market's a little bit like uncertain which way it's going to go here, just for short term, is because you can just chill. You can either close that position, take the loss, okay, or since you have all that extra margin that you haven't used up, you can wait for the market. Let's say in this case, let's say the market starts to bounce and you've gone short, but the market bounces. Well, you can wait. You're waiting. Sure, you're taking unrealized loss on that position that you're holding down here. And the market's bouncing, comes all the way to 50.81, and whatever. It does want to, let's see if we can find something here. Trying to find something. Let's say it does one of these deals. Comes down, boom, gets up here. Starts running out of gas, starts coming back. Now you can short it up in this area. Bam. You short it. You're basically averaging out your losses. Yeah, you're dealing with this one that's way down here, right? But eventually it makes good as the market pulls back even more. And the one that's at the top is really starting to make you money. And your average of these two is going to make you profitable. Do I think that's the best way to trade? No, not necessarily. The best way to trade is as the market starts working against you real soon within your strategy, would be to cut it loose and then just chill and either, go long or wait till it gets way up there because you believe the market's overall it's weak in the long term. So you're going to wait and then you use more of your margin when you really have a lot of confidence in something like up in this area and then it takes the big dive off the SMI. The MACD's below zero down here and you really bring in the bank, right? So there's different ways you can go about utilizing risk management. I would say that as the market right now is a little bit uncertain with this SMI being this low, I would reduce position size, but still, you still want to be trading the market, of course, but you might want to reduce the position size. And you might want to, especially on the hourly chart, and you can join, if you want to join the membership, stick around to the end of the video to show how to do that. But you might want to keep a really close eye on the short-term intraday charts, especially the hourly chart, right? If you're going to short, you want to make sure the hourly chart SMI, okay, it's peaked, is like way at the top, right? When we talk about SMI, we're talking about this stochastic momentum index. So this is a daily chart, but on the hourly chart, you might get, the hourly chart doesn't do like this stuff, it doesn't sit pegged like this, okay? This is nonsense. This is money printing nonsense that the Federal Reserve and the U.S. House of Representatives decides to just keep spending trillions of dollars, the rhinos, and the Democrats are one big uniparty. That's what this nonsense is. Okay, but the hourly chart does more like this, guys. It goes up, it comes down, it goes up. That's what you're going to see in the hourly chart. So you want to wait till it's peaked, right, way up at the top. If you're going to take a short side trade, wait for the SMI to be really peaky. You also want to be keeping track of like the 24-hour and the 50-hour, 24-hour and 50-hour simple moving average. Because a lot of times those will be places where the hourly chart will get rejected. Okay, these are just things you need to be aware of so that you can maximize your opportunity to take advantage of the market. If the hourly chart's way at the top and it starts and you're peaked out and you go short, but the market decides to go the other way, well, at least you were in on it when it was already, when you gave yourself a fighting chance, right? You want to be short, you want it down here, right? All right, let's switch over to the intraday charts and we'll take a look at what's going on there and where the trades of the day were. All right, let's take a look at the 15-minute chart here. Let me just get the drawing set. I don't think it matters. Yeah. 15-minute chart on the intraday chart. Where were the trades of the day? I mean, look at this chart. Oh my, what a thing of beauty. There's just cash bank raining in this chart. Oh my goodness. I mean, this was a money-making day. Now, with the market being as weak as it is, I would resist the temptation to trade long, but for very aggressive traders, you could do that. Look at this right here. This was at 1:15 this morning. Last night, I should say. And the market took off. Look at this signal right here. SMI was at the bottom. Man, that was a really, really perfect setup, guys and gals. If you're an aggressive trader and you're up overnight and you're trading futures, and man, this was sweet. Super sweet. This thing ran, I'd say, probably realistically about 50.85 up to 51.10. Man, that's 15, another 10, 25 points realistically of profit right there. That's a lot of, oh man, that's some serious profit. On one E-mini contract, that's just split that in half. That's $1,225, I think. Okay, if you had two, that's $2,500 right there. And if you're a micro, you can just divide by 10 and get your number. So if you had just two micro contracts, I think it's $250 right here. So for you guys and gals that have really small retail accounts, you still can make money here, just $250 right here. All right, now let's take a look at the next opportunity. This was a really good one. This one's a little bit harder to spot, but it definitely was there. And that's this one right here, 4:15 a.m. Okay, this is really nice. Comes up here. You take the trade short. Okay, you get caught out a little bit. Okay, you wait. You're still getting caught out. And this is typical for this time in the morning. And bam, it gives it all up. So not a bad entry, not perfect, but as it turned out nice. Okay, super nice. All right, let's say that's a little too sketchy for your blood and you get out somewhere as you realize it starts going up. You're like, okay, I made a mistake, I want out, you get out. Okay. Well, it was clear by the time we got into this candlestick right here that something was going on in the market, right? That was at 9 o'clock in the morning. I mean, this is the power hour, as people like to say. Okay, or at least the morning session. And it was absolutely, giving it up. And even if you're super cautious, well, the Gittes Plus indicator told you right over here at 10:30 in the morning, whatever it was, 10:15, what are you doing? Get into the market, and bam, huge. 50.80 all the way down to 50.60, another 20 points, even if you were just like sitting on the sidelines waiting. You had 25 over here. You got 20 right there. If you just strictly were waiting on Gittes Plus indicators, you made 45 points worth of trading just on the 15-minute chart, if that's all you were watching. Okay, that's $4,500 on two E-minis. That'd be $22.50. 2250, I think, if my math is right. Or 2,000, yeah, plus another 250 for one E-mini. Okay, so it's think about that. It's $4,500 for two E-minis. That's 2,250 for one E-mini. And then that's two times, right? This is one time. And if you're trading micros, you just do one of these deals. So two micros would have been $450. One micro would have been $225 today. See, I mean, why do I talk about E-minis and micros? Because I realize some of my members some of them have big accounts. They might be trading five E-minis. They might be doing it through options, whatever. Or they might be trading futures directly like I do. Someone up here who's got a bigger account might be trading 5 of these. You just take this number, divide and times by 5. Well, we know it's 10,000 plus another 12, about 1,200, whatever it is. It makes like $11,000 or $12,000 they made up in this area. Okay, whatever. I'm not going to exactly do the math, but I'll just put 12K here if I could get a 2 going. Okay, that's an ugly looking 12,000, but so it just depends on your account size, right? If you're, like I said, if you're a really small retail account, there's no reason not to make money on E-micros. As a matter of fact, I traded 3 E-micros today. I just wanted to go back to like I used to, and I traded E-micros, not for any particular reason. Made some pocket change on some E-micros, okay? But regardless of your account size, you're either going to be in this area up in the thousands, or you're going to be, the divide by 10 area and you're in the hundreds. Either way, I really hope, especially for the members, you understand that even the small account today, you could have easily made $450. Okay. If all you traded was this area, then you made about $200. Maybe if you just traded one contract here, that'd be different, just be $100. But so for you guys and gals that are members and you have these really small retail accounts, man, you want to get your futures account open. I know there's people, there are members right now that only trade options. Okay, today was probably a pretty good day for options traders because this had to have a lot of volatility today, right? There had to be a lot of volatility for options traders today with this kind of movement. So today was probably pretty good for options traders, okay? But yesterday wasn't. Yesterday was a tight day, and yesterday was still money. I made over $800 yesterday. See, that's what I said yesterday, that, on smallish days or medium-sized days, a lot of times options traders are sitting on the sideline, or they're losing a little bit of money, right? Because the options don't make good. They're just sitting there. But with futures, I made money yesterday and today. Okay? So, again, I think that the best thing to be doing is to be doing both. If you're really good at options trading, use that on high volatility days. When the volatility is kind of low, trade futures. This way you're never really on the sideline. You're just never on the sideline. I mean, I just stick with futures because I'm pretty good at trading futures and I consistently bring in profit, thank God. And I don't worry about it because I've been doing this for quite a few years, and I know over the long haul, for me personally, I'm more profitable, consistently trading futures. Whereas options, I would get some good profitable days and then I'd be sitting there idle. And then get some profitable days and I'd be sitting idle. It's like, nah. And when I started doing the math, I realized for me, futures was just, in the long run, was making you more money. So for you guys and gals that are, sometimes you're not trading at all, spend the time, open up your futures account. Okay, it's not a big deal. You don't have to use it right away. Okay, when you're ready to fund it, and take advantage of opportunities, that you can't always do with options. Okay. Let's take a look at the 5-minute chart real quick and we'll finish up this video. So let's save the best for last here. 5-minute chart. We changed drawing set to 5. I don't think it matters. I think they're the same. Okay, 5-minute chart here. Now, where is the trade of the day on the 5? Oh my gosh, this trade is so crazy good. I don't even know what to say. It's like, it's hard to wrap my mind around sometimes how good the logic is for the membership. I mean, even sometimes it surprises me, seriously. I'm the one that wrote the logic for this, and even sometimes I'm shocked by it. Here, 8:10 a.m., guys. 8:10 a.m., guys and gals. Okay, let's go back over here a little bit. Let me just stretch this out. Here we are at 8:10 in the morning. We've got this pinky purple candlestick thingy going on. Now I got to ask you, the SMI is extremely elevated. Well, at least not extremely, but it's up there. It's hitting at 63. It's decently elevated. The Giddus Plus indicator logic says, hey, I think there's a trade. Now, come on, everybody. Everybody that's watching this video, if you're not a member, what are you waiting for? Seriously, I've been saying this lately because it's so true. If you've been sitting on the sidelines, you don't want to spend the $7.99 a month. I mean, seriously, I just showed, just like a couple minutes ago, how even the smallest retail account could have made a couple $100s today. I mean, how many months does that pay for it? The membership. Look at this entry. Futures, shorting, and long are the same thing. It doesn't matter. It's the same amount of margin. It makes no difference. If you're scared of shorting, just get over it. Just you got to take the step of faith. Just get over being afraid of shorting. Okay, it's not bad. It isn't evil. Okay, it's just money being made in the opposite direction. Just think of it that way. All right, and look at this entry. I mean, seriously, are you kidding me? It just was all the way down from there, from 8:10 in the morning all the way to noon. It got down to 50.47. Now just look at this. This is 51.20 approximately. Okay, maybe we get in at 51.15. Okay. All the way down. Okay, probably going to be really hard to get this last little bit of these two candlesticks, but I could see it coming down here to 50.60. Okay. 60. So it's 40 plus another 10 is 50 plus maybe another 15. 65-point run. 65-point run if you just got in right there and just sat up, and chilled out all day. Because by me, when I put out the daily charts and nightly emails, the members are aware of where I think the support points are for this market that's pulling back. So you can have some higher degree of confidence during this time, right? Think about these 65 points. One E-mini, that's $3,250. Just on one E-mini contract. You made $3,250 in this run. And of course, if it's two, you made $6,500. And lately I've been trading two. So I don't need to tell you how much money I'm making, right? Usually I'm trading two contracts. Now, sometimes I'll pull it back to one somewhere in here if I feel like, okay, I need to be a little careful. I'll liquidate one of the contracts, bank some of the money into the account, and then leave the other one, let it run, right? Because you gotta have some degree of risk management. It can't be a total bonehead. But in any case, I'm just saying that you can see the profitability here is just enormous, right? It's enormous, and this entry was absolutely banging. All right. So if you're waiting on the sidelines to be a member, I don't know what you're waiting for. I mean, stop fooling around. Whether the market's going up or down, this is your opportunity to get in on an amazing value. So you want to become a member. That's awesome. There is a discord.com link below the video in the description of the YouTube video. So make sure you read those instructions carefully. Once you've done that, click on the discord.com link. It's going to bring you over here to get a server. Then you're going to click on server shop. It's going to go to this page right here. There's the $7.99 a month, guys. $7.99 a month, guys and gals. I mean, the streaming charts are down here if you want to know where those are at. I showed those today, the 5-minute, the 15-minute. There's also a 1-hour chart. Okay, there's cycles on the 1-hour chart for when the market may pull back on a daily basis. I have the cycles in there. All right, there's the simple moving averages are on that chart as well. The Get Us Plus indicator that we looked at today is on all the intraday charts, 5-minute, 15-minute, and the 1 hour. Okay. In addition, so when you join, just click down here for the streaming charts. You're going to get them. They're up Monday through Friday, 24 hours a day. All right. Also, I stream gold. So when you join, just ask, hey, Get Us. You can ask me in the member chat, where is the link for the streaming charts for gold? I'll give it to you. Also, if you're a new member, you might want to ask me for the link for the new members video. That's a pretty good video. It kind of walks you through how I go about doing my trading and in my opinion about what I think works and how to use the Get Us Plus indicator and some other indicators, okay? In addition to the streaming charts, I also send alerts from these streaming charts over here to these alerts channels, and gold's the same thing right here. So you might want to right click on these channels and turn notifications on if you're interested in these products, okay? Really nice. Anytime they Get Us Plus indicator thinks there's a trade, it's going to put an alert in here. Premium symbols. I put the premium symbols out every day, Monday through Thursday. In fact, I saw the Russell 2000 in here. I think it might have been natural gas was in there. All right, so there's some really good symbols in there. There's optionable stocks in there. There's indices in there. You want to look at those indices and sub-industries. Okay, that's going to help you understand where the big funds and hedge funds and everybody else is rotating their money in and out of. There's optionable stock symbols in there as well. Really nice. You might want to check those symbols out, okay? The Get Us Only post channel, this is where I post the link for this video that I do every day, Monday through Thursday. So you can watch the video right in this channel. or you can, it'll take you to YouTube if you want to go over to YouTube and watch it. Also, I put out nightly email. So whenever I put the nightly email out, I always notify everybody in this channel right here. So this might be a channel you would right click on and you would turn notifications on. And speaking of the nightly email, when you join, if you want to get the nightly email, put your email address in here. And you're going to get the daily chart of the S&P 500. It's going to have the support and resistance lines on there. It's going to have the cycle analysis on there. I usually give at least a couple sentences or more of my opinion about what I think the market's going to do. Okay, so really nice. A lot of people join just for the email. Some people join for the streaming charts. Some join for both. Okay, solar activity. I just put out a warning, that earthquake warning, last couple days. I do believe we're going to get some big earthquakes. That's right. Believe it or not, activity from the sun drives earthquakes and sometimes volcanoes. I know it's a strange topic to have for a trading service, but I keep track of the sun because not only does it make earthquakes happen, which I have a history of predicting earthquakes, by the way, for those who don't know, and I've been very accurate with it. But it also helps predict sometimes what the market's going to do. May sound crazy, but believe me, the sun has a huge impact on what happens on the face of the earth. So I keep track of that. Fixed income, sometimes I trade corporate bonds. Doesn't happen too often, but if it does, I'll put it in there. And then these two channels is where chat happens. All right, so think about this. Everything in this vertical rectangle, you're getting for $8 a month, $7.99. The streaming chart for S&P 500 in gold, the alerts that go along with them, the premium symbols, the daily videos, the nightly emails, me keeping track of cool solar activity stuff, and then you can chat with other members and myself. If you have a support issue, just throw it in member chat. Like occasionally, because of the way Discord does something, you might not get the email. Just let me know and I'll take care of it. Okay, so just say, hey, get us in to get my email. Usually it's because Discord's forcing people to change their handle and they don't realize it's been changed. And then it interrupts the email the way the system is set up. It's no big deal. Usually I can figure it out pretty quick within a matter of minutes to get it fixed, get you back on the emails, okay? Let's talk about the rules. You got to read the rules. If you don't know the rules and you join and you violate the rules, that's your fault. And then I'm going to be in your face about it. I might have to kick you from the server. If you're doing some really bad stuff, I'm going to have to ban you from the server. Okay, so you got to read the rules, all right? And here's the refund rules. Make sure you understand the refund rules really well. Okay, also there's a disclaimer in here that I'm not a financial advisor. Okay, I do not give financial advice. Everything on this server, no matter if it's me or anybody else posting it, is strictly opinion only. Same thing with the videos I put out. Okay, it's educational purposes only. No financial advice is implied whatsoever. You are responsible for your own trades, guys and gals. That's the way it's got to be, okay? You got to take ownership of your own trades. Okay, yes, I believe the service is going to help you become a really good trader if you're patient, and I believe you can make some serious bank if you're patient, okay, and learn how to do this, okay? But ultimately, you're responsible for your own trades. Okay, and lastly is some rules in here about be nice, be respectful to everybody else on this server. Don't post nasty pictures, links, foul language. I won't tolerate any of that stuff. Okay, I'm a conservative. I'm a Christian. You may not like that, but that's the way it is on the server. I don't care what political affiliation you have. You're more than welcome to join. Just don't bring your garbage on my server, okay? No leftist nonsense. I won't have it. Okay, just do that in some other Discord server or somewhere else. Go do your complaining, but don't do it here. All right, this is a conservative server, so expect to hear conservative stuff. I think that pretty much covers it. I hope everybody had an awesome trading day. The market, both in gold and S&P 500, is absolutely just huge profits being made right now. If you're used to just trading long, and you're having a hard time trading the market, well, you heard my opinion about what I think you should do, how you should set yourself up for success, whether the market's long or short. In this video, go back, watch it again if you need to. All right, so happy trading, everybody. God bless everybody. We'll talk to you all real soon again next time.